Hello traders, I am going to talk to you about intraday trading or just trading. Intraday trading, as you probably already know, is a type of trading that involves opening and closing a certain amount of trades within one or multiple days. Traders usually monitor the market throughout each day, waiting for the ideal conditions to happen, by either entering or exiting their positions. This type of trading usually involves checking regularly market prices, news headlines and data, using statistical analysis in order to look for entry opportunities and exit strategies. So if you are a very busy person or have a full-time job, you can relax and rely on my team to analyze the market and give a better chance to succeed trading stocks. JusTrading is an information system that is supported using concepts of artificial intelligence and statistical analysis. It provides a methodology to analyze the returns and risks of capital markets, and the economic sectors that are part of it. The main objective of this system is to make better decisions when buying or selling shares in the stock market. This system relies on technical analysis rather than fundamental analysis, and it is explained in further detail later in this presentation. The technical analysis is of use as an emerge chart patterns, and indicators can often provide short-term signals to trade. Additionally, this system will provide you with daily major news headlines and economic events on each of our top trading alternatives. A team of 3 people have developed this system, and make its results available to you on a daily basis. Bernardo Marquez, who has a master's in operations research from Stanford University, and more than 30 years of experience in the capital market. Bernardo Octavio Marquez, who has a master's in video game design from UC Santa Cruz, designed and implemented the system using different video game tools. Keshachka Marquez, who has a master's in chemical and environmental engineering from UC Irvine, and more than 5 years of experience in the capital market. I would like to point out, as its name indicates it, this system is for trading. It is not meant to be used by long-term investors. Thus, it has an emphasis in the short term, and not in the long-term return. We are confident that short-term trading offers better return opportunities with less risk than the long-term investments, as it reduces the risks associated with major economic events and earning reports. The methodology of the model comes from a technical analysis, which differs from fundamental analysis, that is based on economic factors such as earnings, revenue, return on equity, and other data to determine a company's potential for future growth. How does the system work? The analysis of the capital market is comprised of 103 of the largest and most representative U.S. companies of all economic sectors, and 15 economic sector ETFs. We did not consider European or Asian companies due to the type and quality of available historic data. And on these tables, you can see the market indices, and a list of ETF and companies included on the energy sector, financial and real estate sectors, healthcare sector, industrial, material and utility sectors, staples and discretionary sectors, and finally, the technology and communication sectors. The opportunities that are considered as a result of our analysis include buys or longs, sells or shorts of these 103 analyzed stocks, and 15 ETFs. Other suggestions such as purchase of options are considered on each stock and ETFs, and bonds on the LQD ETF. We know that the longs and shorts are relevant for the expected return of our gains. We estimate that the expected return for longs and shorts are similar. The analysis starts with the definition of the individual strategies for each stock or ETF that could be bought or sold. In order to do this, the historical price data, which typically includes up to 20 years of data, is used. The historical price data is classified in 9 classes according to each stock's price patterns, during 50 days. More specifically, each of these 9 classes was built based on the entire historical data for each stock. price patterns for each stock were classified as follows. A bear range comprised of classes 1 through 3 represents the lowest price pattern. A trading range comprised of classes 4 through 6 represents the intermediate price pattern. And lastly, a bull range comprised of classes 7 through 9 represents the highest price pattern. Then, the strategy of buy and sell is defined for each class of each stock. Now, let me talk to you more about the strategy, return and associated risk of the system we have developed for these stocks. The individual strategies of each stock are selected for the following entire week, based on the results of our data, and an evaluation of the last 200 days. Finally, a global strategy of maximum expected return is defined, which minimizes the economic risk. A long-short strategy seeks to minimize market exposure, while profiting from stocks gains in the long positions, along with price declines in the short positions. There are 3 main components in our decision analysis cycle, which uses artificial intelligence and decision theory concepts. The first part of this analysis cycle is the expert system. This is the first part of the process where we gather all the available data, and relevant concepts such as 20-year historical price data, economic sectors, list of largest companies within these sectors, trading rules, statistical analysis concepts and formulas, and optimization methods. All these relevant data and concepts, overall, give us the long-term strategies for the stocks that are being evaluated. The second component, learning machine, evaluates the conditions during the last 200 days, price data, stock trends, average return results, return deviation results, and accuracy of the system including failures and successes. The conditions evaluated in this process give us the global midterm strategy. The last main component of the cycle is the risk-return trade-off, which is when we evaluate the relationship between the return gains and the associated risk by using probabilistic analysis, utility functions and optimization. The results of these components give us the short-term strategies for the following week, and the results will then be evaluated against the previous recommendations, and adjusted or calibrated back into the analysis cycle. Artificial intelligence concepts are key to the success of our information system. Edward Albert Feigenbaum, also called the father of expert systems, was a computer scientist who worked in the field of artificial intelligence, and gave his vision and importance of it. The driver of the power of intelligent systems is the knowledge the systems have about their universe of discourse, not the sophistication of the reasoning process the systems employ. Another key to the success of our information system is the use of decision theory concepts. Relevant concepts of trade-off between risk and return are used in our decision analysis cycle, and mainly come from decision analysis under uncertainty, originated in the 70s by Ronald Howard from Stanford University, Ralph Keeney from Duke University, and Howard Rafa from Harvard University. Now, let's see how JusTrading presents the results. The general current state of the stock market is presented on a daily basis. Recent price data and its evolution are presented in class and price charts for the major market indices. In this example, the Nasdaq 100 ETF is presented in 2 graphs, which show its class and price evolution during the last 50 days. Since Nasdaq 100 ETF was classified as bull low, the analysis gave us a strong opportunity to sell. A table is presented showing the price range and the expected sell return, which is the return of the stock based on the current and suggested sell prices. The classes 1 through 9, which represent 3 main price patterns in the stock market, bear, trade and bull, are shown graphically for the last 50 days, and are also included in the table as a class name on a daily basis. Additionally, an options table is presented, and in this case it shows a put option table which has a striking price, expiration date, days left, the actual put price and the suggested possible put price for this ETF. All ETFs and stocks have a profile which describes what they do. For the specific economic sectors, 11 ETFs belonging to the energy, consumer staples, discretionary, healthcare, industrial, material, utility, technology, communication, financial and real estate, are analyzed. In our daily videos, the market sectors table is presented and includes the results of our analysis for each sector. The sector that has the highest possible rating for buying is highlighted in blue to indicate a buy opportunity or red to indicate a sell opportunity. In this example, the energy sector shows the highest buy rating, and the real estate sector, the highest sell rating. Additionally, this table shows other sector ETFs that could potentially be good opportunities and includes the limit price for buying or selling, possible call or put prices, as well as the classification these ETFs have. Recent price data and its evolution are also presented in class and price charts for these sectors. An example showing changes in class patterns and prices during the last 50 days for the energy sector is shown. In this case, it was classified as bull low, which is based on the evaluation of its class patterns, and a weak opportunity to buy was identified. A table showing the price range for buying, which includes the possible buy price, and the limit buying price labeled as do not buy above, which has the highest risk, and above that value we do not include it as a buy opportunity. The expected buy return, which is the return of the stock based on the current and suggested buy prices, as well as the current class name classification are included. Additionally, the suggested sell price range is shown in the table, and includes the possible sell price, and the limit selling price labeled as do not sell below. An options table is presented, and in this case it shows a call option table which has a striking price, expiration date, days left, the actual call price and the suggested possible call price for the energy sector. For each of the analyzed economic sectors, major opportunities of longs and shorts are presented, and the stocks with the highest rating, either as buys or sells, are identified. In this example, a table for the energy sector shows a list of stocks, which includes the highest rating for buying or selling opportunities. The top buy opportunity highlighted in blue, in this case Halliburton Company, shows the highest buy rating. The top sell opportunity highlighted in red at the bottom, in this case AOG Resources, shows the highest sell rating. Additionally, the table lists other stocks that could potentially be good opportunities, and includes the limit price for buying or selling, possible call or put prices, as well as the current class classification these stocks may have. A reduced list of stocks are shown for longs or shorts trading. A new buy suggestion stock is presented in a table and graphs. Changes in class patterns and price behavior during the last 50 days are shown for the suggested stock, in this case, Lockheed Martin. The stop buy percentage of your stock price trade, current expected buy return, past buy return, which is based on the last 200 days, as well as the suggested buy price range and class classification, are included. Additionally, an options table is presented, and in this case it shows a call option table which has a striking price, expiration date, days left, the actual call price and the suggested possible call price for this stock. From the reduced list of stocks, a new sell suggestion stock is presented in a table and graphs. Changes in class patterns and price behavior during the last 50 days are shown for the suggested stock, in this case, American Tower. The stop sell percentage of your stock price trade, current expected sell return, past sell return, which is based on the last 200 days, as well as the suggested sell price range and class classification, are included. Additionally, an options table is presented, and in this case it shows a put option table which has a striking price, expiration date, days left, the actual put price and the suggested possible put price for this stock. Previous selected stock suggestions for longs, now classified as holds, are updated daily with the suggested price range, and its corresponding stop price. The stop price is related to the maximum economical risk allowed for a stock. In this case, it represents the minimum price we suggest you stay long, and below this price that you get out of this trade. The expected current buy return, past buy return, which is based on the last 200 days, as well as the range of suggested price for buying and class classification are included in the summary table. In this example, graphs for Citigroup Incorporated show the changes in class patterns and price behavior during the last 50 days. The price chart also shows the stop buy price as a blue line, and the sell price range, which includes the minimum sell and possible sell prices, as red lines. Additionally, an options table is presented, and in this case it shows a call option table which has a striking price, expiration date, days left, the actual call price and the suggested possible call price for this stock. Previous selected stock suggestions for shorts, now classified as holds, are updated daily with the suggested price range, and its corresponding stop price. The stop price is related to the maximum economical risk allowed for a stock. In this case, it represents the maximum price we suggest you stay short, and above this price that you get out of this trade. The expected current sell return, past sell return, which is based on the last 200 days, as well as the range of suggested price for selling and class classification are included in the summary table. In this example, graphs from Medtronic plc show the changes in class patterns and price behavior during the last 50 days. The price chart also shows the stop sell price as a red line, and the buy price range, which includes the maximum buy and possible buy prices, as blue lines. Additionally, an options table is presented, and in this case it shows a put option table which has a striking price, expiration date, days left, the actual put price and the suggested possible put price for this stock.